top 3 things to consider before you make your investment decisions going forward over the next couple of weeks. Couple of things that I'm focusing on, actually 3 things that I'm focusing on for today. Federal Reserve interest rate announcement. We heard the Bank of Canada already this morning, just before 10 a.m. We will hear from the Federal Reserve at 2 p.m. I guess right now, we're looking pretty much that they're going to cut rates, probably about 85% chance that they will cut a quarter point. Key U.S. economic updates. We're going to get a bunch of updates coming actually next week. So after the Federal Reserve has their meeting, we're going to get jobs data, inflation data coming out. The last data we received is all the way back for September. We never received any October data, and the data we're going to get next week is going to be for the month of November. So that has the ability to affect markets up or to the downside. Looking for bargains, even as markets they're at or near all-time highs. And this is an interesting one because with markets near or at all-time highs, you would think there really aren't many bargains out there. But I don't think that's the case. This is different. I think with the pullback that we saw back, let's say, middle of November, third week of November, that 5-6% pullback on the S&P 500, you saw a bunch of companies, I think good quality names, pull back in their share prices. And I think some of those names represent really good value right now. So I think there are bargains to be had, even in a market that is at all-time highs. Let's go to our first topic, or I guess first thing to consider before you make your investment decisions, and that's the Federal Reserve interest rate announcement. Our first chart that we have, very simple chart that we show many times. This is your target range for federal funds rate. You can see it coming down on the right-hand side. As always, as I always say, they have a range. We have an actual rate. They put it as a range, 3.75 to 4%. That is the range that it sits at right now, down from, that 5.5% range not that long ago. So hopefully we can see the Fed lower rates. I think the market has priced in the lower rate already. And if we do not get a rate cut come 2 p.m., I don't think that's going to be a good thing for the stock market for today and for the foreseeable future. If they do cut, I think the market will just take it in stride and probably won't have much of an effect at all. Our next chart talks about probabilities, right? We've seen this chart before. Probabilities that the Fed will cut rates, 87.5%, so up a little bit from 85 that I mentioned. The chances that they're going to not cut rates, 12.6%. So highly unlikely that they will not cut. I think now the focus is now started to turn to next year. How many times will the Fed cut next year? And I've been hearing many talk about maybe 2 cuts next year. We know that President Trump is going to put a new person to head the Federal Reserve, and that person will probably be quite dovish. And obviously, he's going to put someone in there that he wants, and that he wants to cut rates next year. He's talked about that many times, that the Fed funds rate is much too high, and who he puts in that big seat will be under a lot of pressure to cut rates. So you can see here that more than likely the Fed will cut rates. I'm sure we'll get a couple of individuals dissent and not agree with a 25 basis point cut. I think Stephen Myron probably will want a 50 basis point cut, and you'll get a few others that may say that they shouldn't be cutting. But make no mistake, if the Fed does not cut, I think that'll be bad for markets. If the Federal Reserve does go forward with a cut, I think it'll be status quo and business as usual, as we say, and we just keep moving forward. So one eye has to be definitely kept on what the Fed will do come 2 o'clock this afternoon. Our next, topic, or our next idea that I think individual investors need to be focused on is this idea of key U.S. economic updates. And we're going to get a few of them coming next week. 2 of the most important ones, obviously, are the jobs and inflation. And that's what the Fed is going to be looking at. Unfortunately, it'll come after their meeting today. So it'll go a long way as to how how the Fed does early on in the new year, right? They're going to have this number, and then they're going to have a December number early on in January. And so very important what the data looks like. Our first chart for this topic, is monthly job changes. And you can see the job growth that we had This is a September number, 119,000 jobs. The month before that, we lost jobs. And then we had a gain, and then we lost, and then a small gain. So it's been up and down, leading to more confusion by the Fed, leading to more confusion by investors not knowing what the Fed is going to do. But as I said, the odds right now are that we will see a cut. CPI data, our next chart, US CPI for September. We can see here, look at the CPI data. It's been relatively stable, right? 0.3, 0.2, 0.4, 0.3, 0.2 back in April, 0.1 we got down to in May. But when you look at CPI or inflation, you got to look at CPI, and you also look at PCE. Our next chart shows CPI out of the US, Consumer Price Index, and you can see 3%. We've been talking about inflation being at 3% for the longest time in the United States. The Consumer Price Index, which is one of the measurements. The second measurement that the Fed actually uses even more often is our next chart, which is PCE. And again, these are all a little bit outdated. They're back from September, but you can see that not only has PCE, the headline number, which is in gold, but the blue line, which is excluding the volatile food and energy or core PCE, coming in at around 2.8%. And it's been there, as you can see, for a little while now, hasn't really deviated quite a bit. Some people will say, well, that's not a good thing because they want to see it down to 2%. And when you look at the glass half full, I guess, versus half empty, at least you could say it's been stable and not rising, even with all the tariffs that have gone through this past year. So depending on how you want to look at it, right now, I think that the numbers coming out next week will give us some new perspective. This will give us the last couple of months a new number as to how inflation is doing and how jobs are doing. And this is the key economic data that I think you should be watching before you make your next investment decisions. And again, we like to look at the US versus Canada because the US data seems to matter more for the stock market, both the TSX and the New York stock markets, the NASDAQ, the Dow, and the S&P 500. Our third topic that I wanted to discuss, and this is a topic about looking for bargains, even in a market that is, shall we say, fair value or at all-time highs once again. Love that Santa Claus and the reindeer there going on an upward trend. And that's really where the market has been, on an upward trend. But there are still some really good names and bargains out there to be had. Some of them I mentioned on our last show, and I'm probably going to mention them again today and mention a couple of new ones as well. Our first stock idea, again, if you can handle the volatility that these stocks bring to a portfolio, will be, yes, if you're guessing Meta, you are right. Meta, formerly called Facebook, right? Changed its name to Meta, the metaverse, a few years back now. You can see that since we've been talking about Meta as a bargain, stock price has actually gone higher on the far right-hand side, down from as high as $796 a share. Today, it sits somewhere around $650 or so, $655. Stock, I think, is a bargain at these prices. I've seen a lot of targets taking Meta shares over $800 a share, maybe as high as $850. And when you look at them on a PE multiple, definitely, as we talk about here all the time, about price to earnings multiples. So the price of the stock versus its earnings, Meta seems a lot cheaper than many other big cap tech names. Next stock that we have here, a chart of Dell Technologies, another name I've been talking about. You can see the steep drop. And then again, ever since we've been talking about it, stock has moved higher. Maybe since we're talking about it, maybe if we talk about a few other stocks, those stocks will move higher as well. You never know, I guess. But Dell has moved higher as well over the last, let's call it, couple of weeks. And now Dell trading just under $140 a share. Again, Dell, big into the servers, AI. It's been a fabulous name to own. Got as high as about 180 and pulled back. And I think it's a pullback that you can continue to look at buying. So buy the dip there in Dell. A name, kind of different name, not a tech name, Blackstone. Blackstone is the largest asset manager in the world today. They manage a lot of money, a lot of pooled money that goes into real estate, for example, buying buildings and companies and other things. And Blackstone, once upon a time, a $200 a share company. Once again, nice rebound over the last couple of weeks. into the mid 150s, but that got under 150 and as low as 140. And I think a good opportunity to look at. Let's take a look at a chart of Oracle, another big cap tech name. Look at that fall off in Oracle. And Oracle hasn't come back like some of the others as yet. Stock is still down well over 30% from the highs. Oracle was a name that everybody fell in love with their deal with OpenAI, parent of ChatGPT. They had a big deal with them. They still do. But for whatever reason, investors are calling it into question whether OpenAI will actually go through with the deal. Does OpenAI have the money to go through with the deal? And we're also hearing that Oracle, to continue to build out their data center, their artificial intelligence data center infrastructure, has had to borrow a lot of money. And that has been worrying a bunch of people. And last but not least, for this segment, a name that is not down as much, but I think a great bargain is Amazon. We have a chart on Amazon. Listening to the CEO of actually a piece of Amazon, which is their most profitable piece, which is Amazon Web Services, or AWS, their cloud business. The CEO there of AWS said they're going like gangbusters, booming business. And he was very, very positive. And listening to him speak and giving examples and talking about the future potential and future growth, I like Amazon. I think the stock is going significantly higher. It is down from its highs in the 250, 260 range, so not down as much as the others, down about maybe $25 from their all-time highs. But I think it has room to go even higher, make new highs in the coming months. So before we move on to the next segment, one of the things I just want to touch on quickly is that if you're wondering, well, Allan's talking about all U.S. stocks here. You are correct. I believe right now that the bargains and that we talk about when markets are at all-time highs reside more in the U.S. than in Canada. Obviously, our market is a lot smaller. Our market is built on banks. It's built on materials, gold. It's built on oil. And probably with the exception of oil, the other two segments of the economy have just been going like gangbusters. And we're going to touch on Canadian banks in just a moment. But overall, I think the bargains are more so in the U.S. today than in Canada. And that's why, for those that know me well, we've been buying a lot of investments in the United States versus Canada. Not to say that, it's all going to go to the U.S., but definitely I wanted to point out that I believe that I guess there are better or more bargains in the U.S. than in Canada. So keep an eye on these good bargains. And if you can perhaps buy some on the dip, I think that's a great idea. You want to also listen for what the Fed has to say, I guess at 2 p.m. And the key economic data that's going to come out next week. How is that going to move markets? Those are the three things that I think you need to focus on before you make your investment decisions.